Good evening, ladies and gentlemen. This is Christopher Aaron. This is the 30th of August, 2017. There is a major opportunity setting up in the precious metals. I do not believe that gold is going to $5,000 or $10,000 an ounce anytime soon. It may go there eventually, but not anytime soon. However, there is a significant move setting up, and the point of this channel is to show you exactly what is happening on the charts with the current prices of the metals, because after all, even if you're going to go buy physical gold or silver, you pretty much are still having to buy and sell at these prices that appear on the charts. So the point of this channel is not to ignore the fundamentals. We understand the fundamentals that are happening in the background, but it's really to be pragmatic and say, let's look at this major opportunity that's setting up here that we have already been participating in, and let us align ourselves with the highest probability outcome that can be developing here. As we look at the spot gold price first, and if you are new to the precious metals, just know that when you're going to buy physical gold or silver, or even if you're going to buy an ETF or something of this sort, you are always going to pay a premium above the spot price of the raw commodity, to put it into such terms. But this goes for anything that you buy. If you're going to buy a cotton t-shirt, you are going to pay a premium above and beyond what a unit of cotton would sell for wholesale, for manufacturing purposes. Same thing with food. You are going to pay a lot more for a manufactured, finished food product than the bulk commodity itself, whether that's fish or grain or anything of that sort. So we are looking at the spot price here in gold, which is closed. The most important thing to know here is we have closed above 1300 on 3 days in a row. Now, the important move was back on Monday, so that is this blue line right here. And this was that pop that I was looking for. I was discussing this over the last couple weeks, that the nature of the gold market has been changing, and we will see this in the 1-year chart, which is coming up. But the nature of the gold market at this attempt at 1295, 1297 was different. Gold was consolidating in this region for the last several weeks, whereas on the previous attempts throughout 2017 to overcome this 1295, 1300 level, they had been 1-day spikes and then quick drawdown again. So we've seen a consolidation here in gold, and then boom. It's always these kinds of moves, these pops, when a market is going to take out an important technical level that we've been watching here, the $1,300 level. So one close above 1300, coming up to 1325, 1327 here. We will see the significance of this in the next slide, this peak right here. Coming back, but a second close above 1300, and today the third close above 1300. This looks very good. Certainly it's not skyrocketing, but the stability here above 1300 is fairly good. Now, I could see it a worst case scenario, gold coming back down and perhaps doing a 1 or 2 day dip below 1300 before spiking back in the opposite direction. Perhaps just to scare out some people who are being a little bit too short-term oriented here. Sometimes we have a zone of support as opposed to an exact round number. So let's look at this. We will turn over to silver here. Now, silver having a nice continuation move as well. Above the $17 level, that is nice to see. Certainly a lot of potential here in silver going forward. I will put this into perspective. Looking at gold, the 1-year chart. Now, there are changes here from what we were looking at a few weeks ago, and we're looking at this, what is looking good, a legitimate breakout attempt, notice, of this long-term downtrend. Multiple hits on this. The false breakout, here's what we were talking about in the last slide. A false breakout, so gold had risen above this level and then immediately reversed starting the next day. Here, the most recent attempt, you can see this grinding kind of consolidation here under a key resistance point with a whole number of other leading indicators moving in the right direction. We were looking at gold strong against the commodities. We were looking at some weakness in the gold to silver ratio. All things considered, those data points were saying that the consolidation here below this major resistance was showing a different behavior than the spike highs here of the previous several months. So boom, there was the pop above 1300. Really nice to see holding above that. Now, what is happening right now, this is so key, is that gold, after 3 major attempts here, gold is working on this Trump reversal resistance. This is the zone here that occurred between about 1295 and 1335. These black double lines. And this represents the single highest volume day in gold futures trading history. When this happened, this zone, this spike higher here, back on the election night. And so what you've had here in these several attempts, and now this third attempt, you have a chipping away. If you can imagine, so a certain number of contracts that were overhanging here were purchased. Another number of contracts that were still overhanging from these sellers here were purchased in June. And more contracts were being accumulated here in August before the resistance of sellers was taken out sufficiently. So this is a significant breakout. This was the real significant breakout just a few weeks ago from the long-term downtrend. The secondary breakout here above 1300 is important for confirmation. So what do I expect? Now, when we look going forward here throughout the rest of the year, we're going to cover just the short term here. These dashed lighter black lines correspond with each of these swing highs that we saw back in 2016. Each of these swing highs, all things considered, should be expected to form some sort of short-term resistance, some sort of short-term reversal. This could be only for a couple days at a time, but we will be paying attention to each of these resistance levels here, starting with 1345, then getting up to about 1355, 1372, and finally 1378. So what I think is developing here is at any point we could have a retest of the 1300 level, perhaps a few dollars below just to scare everyone out. But this looks like really good technical action to me here. And then I think we're going to see a continuation of this breakout as gold starts chipping away of each of these short-term peaks. And it'll probably skip one or two along the way and kind of blow through a few of these resistance zones. We'll probably get back up to that 1378 level before something of more of a serious short-term correction here to scare everyone out, convince a lot of people that this was a double top. I do not think it will be. And that will finally be blown through, most likely on the second major attempt of this series. So this is all coming up over the next 3 to 6 months. And I will tell you that when gold breaks through 1378, which I expect either later this year or early next year, you will have a tremendous amount of new technical-based buying coming into this market. We have higher targets for next year. But this is what to expect, something of a 2 steps forward, 1 step back, hitting each of these resistance levels here over the next few weeks to a few months. Any sort of a close back below 1260 at this point would radically change the thesis, but I do not believe that is going to happen. I think people who are ignoring this long-term downtrend breakout here and are only focusing on the fact that, well, gold is still not above where it was in 2016, I think they are missing what is developing. So this is an opportunity right now to be participating in this market before a whole lot of momentum picks up later this year. That is my take on it. Silver, looking at silver here, breaking through this primary downtrend that we had seen form from the April high from 1850. Silver is lagging gold on a relative basis. And how do we know that that is true? It's because this peak here in November represents the Trump reversal resistance. Gold is already at that level, and look at where silver is, significantly still below that level. This resistance comes in here between $18.50 and $19. So there is a lagging happening in silver on a short-term basis. So as gold works its way back up toward 2016 highs, what do I think is setting up for the silver market is a move most likely back to this $18.50 to $19 level. It looks to me like silver will continue to lag gold over the short run here, over the next few weeks to few months. Now, what I predict is that when gold gets back to its 2016 highs and we see silver still perhaps $1 or $2 below 2016 highs, there will be a large call out in the media declaring that the entire move in the precious metals is suspect or false because silver is, quote, not confirming gold's move. That's what I suspect we will see from the mainstream investment media at that time that gold is challenging the recent highs. They are going to be wrong about that. Silver does not need to confirm every single move for gold across every single time frame. It is perfectly normal. We see countless examples of this throughout history that will not be mentioned when you see these articles coming out probably later this year that will mostly scare a lot of new people away from this market, especially if silver lags perhaps even a little bit more than I anticipate. So we can look at these examples. For example, here, 2008 to 2011. Gold, this was the high that gold had made here at $1,000 an ounce. I do apologize, the y-axis here for the prices here is covered up, but it's the relative performance that's most important here. Beginning of 2008, gold peaked just above $1,000 an ounce. A year and a half later, it finally exceeded that level clearly, coming up to $1,225. And what happened to silver during this time? The $21 peak from 2008 was not exceeded. In silver, it only got up to about $19. And so a lot of silver investors were really frustrated here seeing gold lead, and a lot of people were coming out and saying, well, silver's not confirming gold's move, so therefore, sell all your precious metals or, dump all the miners right now. And what was the result after this lagging in silver? Of course, silver continued to lag for another 8 months here as gold continued to make new highs. And then, boom, in the flash of an eye, or more like 6 months, silver tripled in value from about 17 up to nearly 50. So this example is just to show you here that if we are in a scenario here of silver lagging, which it looks like it's going to, this could just be a short-term lag, or can we imagine, for example, that silver stays underneath $21 even as gold is back up to above $1,400? It would really frustrate a lot of people. And then perhaps if gold corrects back down to $13.75, silver corrects all the way back down to 18 or 17, it would really frustrate a lot of people. This is just to say, though, if you're a silver investor, most of the work in being a silver investor is done in the waiting part of the game, in the lagging part of the game, and then the rewards come very quickly, but they come rather suddenly. So you just have to expect this from a mental standpoint, from a psychological standpoint. I do think the metals look good from a technical standpoint here over the rest of the year. I do want to take this opportunity to extend my thoughts and prayers to anyone who is in the Texas or the Louisiana coast areas. It's been a devastating storm down there. I can't even imagine what people are going through. So my prayers are with you for anyone who is there or anyone who has family or loved ones there. The research that is published here every week contains the exact trades and the exact investments that I am making with my personal account. And it also contains all the research that goes behind those moves. So it's basically designed to allow the private investor to understand all the data points that are coming together that are making me either bullish or bearish at a given time for physical gold, physical silver, the GDX, individual miners that we own here. We didn't cover the miners today, but I think that is, I think the move is going to be even bigger in some of these miners that are still historically undervalued. We covered that last week relative to many different asset classes. So you can find out more on that on the website if you're interested. And I also work with individuals from very beginners in the precious metals who are just looking to make sure, for example, that they're not buying the wrong kind of gold or silver, not spending more than they should spend on, let's say, a numismatic coin. Numismatics are very interesting, and there is a place for them in this market, but I do not think the beginner should be paying high premiums for numismatic coins when they're looking to get exposure to the metals themselves. I also work with some people on constructing individual portfolios or assessing various components of their precious metals portfolio. Thank you very much again for watching. I will see you this time next week.